Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. Hey, welcome back, everyone. It's time to talk business. Say what you want about Uncle Frank, but I'm going to give it to you straight. No FUD, no hype. I present the facts, and then I give my theories. Let's start in the AMC newsroom from September 1st. Taylor Swift, the Eras Tour concert film, shatters advanced ticket sales records at AMC theaters. 26 million in ticket revenue sold on Thursday. Am I excited about this new revenue stream for concerts and live events at AMC? Of course I am. I've been attending boxing matches and football games for the past couple of years at AMC. I'm equally excited about our merchandise website, our branded credit card, our retail popcorn, and even future retail products like candy and wine, but keep things in perspective. 26 million in advanced ticket sales barely pays Adam's 2022 comp plan of 23.7 million. Now, let's move to the 13th. AMC successfully completes at-the-market equity offering, raising more than $325 million, substantially increasing its financial resistance. Okay, so Adam sold again at the bottom. But there it is. Adam, Morgan Stanley, and Antara planned the ape designed by Citi with two of our known short sellers, which featured a reverse split we didn't need, but Wall Street certainly did. All of that from ape to here to raise $325 million. Did we need to? In my opinion, no, because we had $640 million in liquidity by the end of Q2, and that didn't include any revenue from the Barbenheimer quarter. But it's over now. The YouTubers and yes voters told us this is the way. We need to smart dilute. Every time we've diluted in the past, the stock has gone up. We need this reverse split because the QSIP change will surprise the very short sellers that helped design it in our very own boardroom. Well, are you satisfied with the pounce now? How do you feel about all the promises and hashtags that went along with it in retrospect? Complete disaster, right? AMC closed at 836 on Friday, up 2.7%. That's right, we're down 90.44% year over year. Congratulations, all of that worked out. Anybody that disagreed with you was a shill or a paid shill or spreading FUD, right? Okay, now we do have our annual meeting of stockholders, which will be held on November 8th. That is exactly 52 days away. Now, to avoid any confusion going forward on where I stand, this is not financial advice. I am not a financial advisor, and I will never tell you to buy, sell, or hold any securities or cryptocurrencies. But I am long AMC. I'm averaging down on dips. I am strategically writing calls and puts when the opportunities arise, also in an effort to improve my average cost. I do not believe the shorts have covered yet in earnest, and I don't see any chance of a MOAS on the horizon, not with the SEC, DTCC, prime banks and brokers, LULD, and all the predatory short hedge funds working together to avoid one. But there is a chance for a short covering event. Adam Aron or AMC will have nothing to do with a MOAS or short covering event if one occurs. I am certain Adam Aron or Philip Lader never has or ever will be interested in any strategy that would result in a short covering event or deliberately hurt the interests of Wall Street in any way. They never have and they never will. I challenge you to give me even one example where Adam surprised Wall Street with a release that resulted in a huge price spike for shareholders. But I can easily give you a dozen examples where he has intervened and stopped upward momentum on the stock to assist in preventing a short covering event. Why do I bring it up? Because all the new buzz with the YouTubers and on Twitter is about a surprise dividend and maybe even a share repurchase. And, oh, they're never going to want to pay that to billions of synthetics. Yeah, Can any of that happen? Sure. But guess what? It's not going to be a surprise. We will telegraph it. If there ever is a dividend or a share repurchase, the short sellers will actually have a hand in designing it, just like they did with Ape. There will be no surprises, okay? The only way we are going to ever get a short covering event or a MOAS will be from a black or white swan. That is it. Some surprise event that adversely affects the shorts. Something that would put polarity between the prime banks and brokers and the hedgies, or the politicians and the hedgies. It is not going to be, I don't care if it's a digital blockchain dividend. If we telegraph it, they will prepare for it. They will not be caught by surprise by anything but a black or white swan, period. So how can you be so sure, Uncle Frank, guys? Just start by reading the LinkedIn bio of Derek Van Zandt of Citi. Yes, the same company that has had a sell rec on us for years, that recently cut our price target, that is actually short AMC. He brags in his bio. Past advisory assignments includes AMC's creation and distribution of its preferred equity security. That's Ape. From beginning to end, guys, a short seller of AMC and Morgan Stanley and Antara designed the Ape, the dilution, the reverse split, the shareholder vote, all of it. All of it was planned in our boardroom. Please trust me when I tell you, these people are going to do nothing to hurt the interests of Wall Street, which include Citi, Morgan Stanley, Bank of America, who's also short AMC, JP Morgan, who's also short AMC through Highbridge, Goldman Sachs, who owns a boatload of puts against AMC. Trust me, these people, there is no incentive or upside for them to surprise Wall Street with some type of strategy or a release that's going to cause a short covering event and cost these guys billions of dollars. They are not going to do it. They've never been interested in it, and they never will. The only way you can take down these people is with a white or black swan. That's it. Now, let me give you an even bigger reason why Adam Aron, Philip Lader of Morgan Stanley, who leads our board of directors, and Citi, who is our investment banker, have no interest, okay, in any strategy that's going to cause a short covering event. Now, here's an article from August from Reuters. Goldman Sachs, JP Morgan Chase, Morgan Stanley, and UBS have reached a $499 million settlement of an antitrust lawsuit by investors who accuse them of conspiring to stifle competition in the stock lending market. Now, guys, I don't know if you noticed, but everybody on the screen is short AMC, with maybe the exception of Morgan Stanley. Also, I'd like you to know AMC makes up, I don't know, 0.00025%, probably way less now, of the entire market cap of U.S. stocks. But I've heard estimates that we are 10% of all securities lending. Okay? Keep that in mind. Now, the article goes on. The settlement was disclosed on Wednesday in a filing in Manhattan Federal Court and also covers Equilend, a joint venture between the defendants. Credit Suisse, another one of our short sellers, now owned by UPS, reached a related settlement of about $81 million last year. Bank of America, also short AMC, remains a defendant, core papers show. So you guys, do you still believe that anyone over at AMC, whether it be Adam Aron, Citi, Morgan Stanley, you think that they're going to do something to hurt like the parent companies that they work for? Citi, Morgan Stanley, JP Morgan, Goldman. It is out of the question. It's out of the question. Now, let me give you a little more background on the securities lending business in the US. This is from a pension fund magazine. Inside, the $499 million lawsuit settlement exposing opaque world of securities lending. And on the screen, you could see this joint venture, Equilend, right? So then upper right-hand corner, you've got Morgan Stanley. They lead our board of directors in the way of Philip Lader. Goldman Sachs, they spoof and layer the shit out of us. They're short AMC through a ton of puts. You guys know UBS, that's Credit Suisse. Those are the guys that had a 95-cent price target, were short AMC and then blew up themselves, right? Then you've got JP Morgan Chase, they're short AMC through Highbridge, which is a subsidiary they own 100% of. And then lower right-hand corner, Bank of America, also short AMC. So you tell me, guys, you tell me if Phil and Adam and our investment banker Citi are going to throw all these guys under the bus. Yeah, it's out of the question. So, Uncle Frank, what was the case and settlement about? How do you connect it to AMC? I'm glad you asked. For those of you that stuck to the end of the presentation, now you're going to see Wall Street for what it really is. From the article, some of America's billion-dollar pension funds have agreed to a proposed settlement in a lawsuit against Wall Street banks in a long-running case that cracked open the hidden world of securities lending. In securities lending, pension funds and retirement plans lend out their portfolio shares to hedge funds and other investors using Wall Street brokers that charge a fee, the cost to borrow fee, right, guys? Okay, by some estimates, stock lending totals $1.75 trillion in market value. By the way, AMC may make up 10% of that. But the business was so tightly controlled that it effectively functioned as a cartel, according to the pension fund's class action lawsuit. Their partial settlement was filed in court August 23rd. The secrecy behind securities lending may be changing. The group of pension funds led by the $40 billion Iowa Public Employees Retirement System reached a $499 million partial settlement in the antitrust lawsuit alleging that Morgan Stanley, who runs AMC's board through Philip Lader, Goldman Sachs, who spoofs the hell out of us and is short AMC, UBS, which is Credit Suisse, they're short AMC, JP Morgan Chase, that's short AMC through Highbridge, and Bank of America, that's short AMC, ran a price-fixing scheme using their own joint venture called Equilend. In effect, the banks hurt pension funds by keeping fees paid artificially low. That prevented asset owners from earning more revenues when they lend out stock, according to the complaint filed in the U.S. District Court in the Southern District of New York. There you have it, guys. Adam and Phil and Derek from Citi are going to do absolutely nothing on our behalf that might hurt the interests of Wall Street. It will be a black or white swan. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.